Hello everyone. Good morning. Gaurang Shah here from Geojit Financial Services. And as we begin the trade for this week, Monday morning, there's been a downwards opening, but as I speak to you now, there has been some amount of recovery in the market as well. When we started off, there was a little bit of deeper cut, but as of now, the levels on the Sensex 55,600, down about 175 odd points. Nifty is about 16,550, down about 50 odd points. And the recovery that we've seen is in the Nifty Bank, which was down, but as I speak to you, trading at 35,300, up about 35 odd points. So I think this week is not going to be anything major because of lack of events. We could possibly trade sideways with a little bit of positive bias whenever we go down, as we saw this morning. Dips should be seen as a buying opportunity. I think that's what we've been maintaining, and even going forward, I think that's going to be the trend. On the rupee dollar equation, 77.66, that is the price of a dollar to rupee. A little bit of weakness this morning, and as I've been saying since the last couple of interaction, that there is possibility that this weakness could get a little bit more deeper on the rupee front. We could even see levels of 78 and beyond. Remains to be seen what the RBI does, because we have the RBI credit policy as well in the next couple of days. So just in case if there is some positivity, then there could be some strength coming back into the rupee. But eventually I think 78 and beyond could be seen, at least in the immediate short to medium term. On the energy basket, optic, of course, $121 a barrel on the Brent, $120 a barrel on the NYMEX. And last week, when the OPEC plus nations met, they have been in principle agreement that from July onwards, they are going to up the production of crude oil, which may bring in a little bit of stability. Of course, there was news flow of European Union planning to completely ban import of Russian crude and gas. It's all news driven. One needs to be a little bit careful, but I think with the OPEC plus agreeing to increase the production in the next couple of weeks, we should see some amount of correction in the crude oil prices. As I was mentioning, this is a week wherein news flow will be more focused, especially from the overseas market. On the domestic front, no big triggers, but just to update you, the COVID cases in Maharashtra has again started to move up, and the state government has issued advisory of masking in public places. Remains to be seen in the coming days and weeks what is the situation, and let's hope that there is no serious restrictions put in place once again. So it's only prudent that we as citizens, go by certain advisories that have been given. It's only prudent for our health and good for our future as well. On the market, once again coming back, what I have witnessed and what I have seen, and where we have been very recently on the lower side, 15,800, 15,600, I think that's a congestion zone on the lower side. And if you recollect, about a year back, on the charts, if you go to see, these are the levels where there was a lot of congestion being formed. So at least in the current scenario, my view is that a deeper correction below 15,600 or 800 looks a distinct possibility, unless and until there are certain events which unfold, which may lead us to break those levels. On the higher side, where we are, I think 16,500, 16,800 are the higher levels wherein we'll see resistance, and the market will find it a little bit difficult to take those levels off. But overall, I think we should give it to the market. After seeing a correction of 15% plus, it is only prudent to expect a little bit of consolidation in the levels, on the levels where we are. So that will make a very strong base, and as the positivities arises, as news flows turn positive, I think we will have the strength to regain much higher levels and stay over there. That's very important. So that's why this base building exercise is very necessary at current levels. On the sectorial pick, I think I've been talking about banking, autos as a contrarian pick. Cement, metals are also included over there. But one sector that I feel could possibly see a little bit of more buying activity in fundamentally sound, strong stocks, and that is the real estate sector. And friends, if you just go by the data that has been given out in terms of the registration of new properties, both commercial and residential, it is at the all-time high. And the statements made by the respective strong managed companies in the real estate sector, they are saying that the sentiment and outlook is very, very strong, and the demand is consistently on the better side. And for the first time, I was reading one report, there could be an upward price revision of properties in some geographies to the extent of about 15 to 20%. So I think this recovery is good to see, and not to forget, real estate sector is one of the largest contributor for employment as well. So if there is meaningful recovery in the real estate sector, I think unemployment should also go down. And along with that, the sentiment hit that was taken by metals and cement could also stabilize a little bit. So I think you should also, along with banking, auto, cement, metals, IT, NBFCs, I think real estate sector, and I have spoken about this sector in my earlier interactions with all of you all. So try to look at names like Godrej Properties, strong names, of course, Godrej Properties, Oberoi Realty, Shobha Limited, Prestige Estates are some of the strong names and balance sheets in this sector. But please bear one thing in mind, that despite the discipline that has come into this sector, it still remains a little bit of high beta kind of a sector. So you need to have a little bit of elevated risk appetite. And on the autos front, I think our top picks I've already mentioned: Tata Motors, M&M, followed by Maruti, of course. Then you have two-wheeler names like Bajaj Auto and TVS Motors. Ashok Leyland month-on-month numbers was quite strong. And of course, you have Eicher Motor and Escort. So these are some of the ideas. My sense, friends, is that this market will test our patience, at least in the near, short to medium term, in terms of consolidation. It will possibly frustrate a lot of us because there will be absolutely flattish movement on the screen. But I think interest should be there in terms of sector and stock specific ideas. I think over there you will see a lot of action coming through. Thank you very much for your patience hearing. I'll see you again next week. Till then, bye bye. Mask off, be safe, stay safe. Thank you.